Last Friday, silver closed at approximately $80 an ounce, and all signs suggest that something significant is on the horizon. The coming days could turn out to be one of the most pivotal periods for silver price. Currently, silver is sitting at $80 an ounce, while gold has just crossed the $5,000 mark. The market is starting to heat up considerably. The CEO of the Scottsdale Mint recently shared his thoughts, noting that ongoing conflicts have dominated attention across all markets. However, the money printing required to fund such events has only just begun. Wars, in his view, are part of a broader controlled demolition leading toward an eventual monetary reset. He pointed to undervalued assets and reminded followers to zoom out. Rates decline every recession, debt rises every cycle, and money supply explodes during every major crisis. That is precisely where we find ourselves today. The modern monetary system operates this way, and the obvious question becomes, what happens to scarce assets when the number of currency units keeps multiplying? Gold, silver, copper, and energy all stand to benefit. Adding fuel to the fire, recently 4.7% of the entire global silver float departed vaults in a single day. And this is happening in a market that has already been running a 6-year supply deficit. To understand what silver leaving vaults actually means, one must look at the 3 major storage hubs worldwide. The LBMA operates in Europe, COMEX is based in America, and the Shanghai exchanges are located in Asia. LBMA vault data, reported monthly, showed a growing silver stockpile until a recent downtick. However, that dip is minor compared to what is happening elsewhere. The total COMEX silver stockpile has been getting absolutely decimated over the past several months. Many will recall that when tariffs were being introduced in 2025, large quantities of gold and silver flowed into the United States. But most of that inventory has since disappeared. As for the Shanghai Gold Exchange and Shanghai Futures Exchange, there is practically no silver remaining, which likely explains why silver is currently trading at such a significant premium in China. That premium over COMEX stands at roughly $13. This makes complete sense. If a nation is running low on silver while simultaneously needing more of it for industrial purposes than any other country on Earth, prices will naturally get bid up aggressively. The former head of metals trading at JP Morgan recently offered perspective on the precious metals landscape in 2026. Despite rising inflation concerns, oil approaching $100 per barrel, and reduced expectations for Federal Reserve rate cuts, the precious metals complex has held up remarkably well. Gold is up 15% so far in 2026, and silver has gained 20%. And this comes on top of an already strong 2025. The core fundamentals, he noted, remain unchanged. A 1-year performance comparison puts things in even sharper perspective. Silver miners are up 191%, gold miners up 157%. Silver up 149%, gold up 73%, the S&P 500 up only 21%, bonds essentially flat, and Bitcoin in negative territory. As for what comes next, the price action over the coming days could be very telling. A massive consolidation pattern in silver is nearing its completion, and a significant move appears imminent, either to the upside or the downside. According to one technical analyst, silver's large wedge formation is close to resolving. A breakout to the upside would likely send prices back to all-time highs and potentially well beyond, with targets in the $150 to $170 range. A breakdown, on the other hand, could trigger a retest of the major breakout from the decades-long cup and handle formation. Separately, another analyst posted a chart showing a 3.5-month triangle formation and expressed belief that a breakout in March is likely, with an immediate target of $103 followed by $153. That analyst does not believe $153 will represent the final top, and anticipates a concluding parabolic run carrying silver into the $240 to $260 range. The most recent week has been a difficult one for the precious metals sector, but conditions appear set to shift. There will likely be considerable volatility in the days ahead, and regular updates will be important to follow. Regardless of short-term swings, holding gold and silver in this bull market environment appears to be one of the stronger positions an investor can take compared to most other asset classes available right now. 2.